Whenever you want to value any company in the world, the first question you always have to ask is, what is my risk-free rate? Risk-free rate is one of the most important fundamental question in finance. Risk-free rate is the rate of return where there is not an iota, not even a possibility of default. It also means what guaranteed returns you can make on an investment. Now, risk-free rate also represents the opportunity cost, because if you are not investing your funds in a particular investment, then you can earn that guaranteed returns from your investment. Now, risk-free rate has two aspects. Number one, there should be no default risk. As we stated, there should not be any possibility of default. What I mean by that? There should be no risk that your return, that is, whatever you are earning on your investment, and the principal which you have invested will be lost. And the second aspect, that there should be no reinvestment risk. Now we understand the default risk. Now you must have a question. What do you mean by reinvestment rate? So let's take an example. Let's say your investment horizon is 5 years. At the end of year 1, you have to reinvest your money again at interest rates at that time, that is after 1 year. Now you cannot possibly know what will the interest rates at that time. It can be higher or lower than the time when you originally invested your money in. Now this risk of not knowing the interest rate after year 1 is basically called reinvestment rate. Now the risk-free rate for US dollar cash flows is Treasury bonds issued by the United States of America. Why? Because the US government is considered to have no risk of defaulting on its debt. Now we understand that risk-free rate is important. Now the second question is, how to estimate the risk-free rate? What are the things to consider when we are trying to estimate a risk-free rate? There are three things that really matter. Number one, the time horizon. Whenever we are doing valuation, we are thinking cash flows in long terms. So risk-free rate in valuation will depend upon when the cash flows are expected to occur. And since the valuation, the cash flows are expected to occur for a long time, the risk-free rate has to be taken for a long time. The second one is currencies. Now this is very important to understand. Let's say if I'm valuing a company having cash flows in US dollars, I will take the risk-free rate in US dollars. Now remember, I didn't say a US based company or a US based registered company. I said the company is having cash flows in US dollars. And similarly, if I'm valuing a company having cash flows in, let's say, Indian rupees, I will take risk-free rate in Indian rupees. And similarly, a company having cash flows in, let's say, in Brazilian reais, I will take the risk-free rate in Brazilian reais. So the two most important things which you understand is the time horizon. The risk-free rate has to be taken for a long time. And second, what is the currency in which we are valuing our company? Now, I said long-term time horizon. What I mean by that? I said it has to be US Treasury bond, right? So what US dollar bond you should consider for a risk-free rate? Should be a 3 months, 6 months, there's a 5-year bond, there's a 10 years bond, and there is even a 30-year bonds. So what time horizon should you consider? Now, I usually prefer a 10-year yield because it is the most easiest to get and it is widely followed all over the world. You can get a US 10-year treasury yield by simply going on the net and typing and Googling it. For example, the today's 10-year treasury yield is 1.619%. What does that mean? That means if I want to value a US based dollar cash flow company, then I will take my risk-free rate as 1.618%. Now I have a final question for you. Now finally you come to the third part. So when we were taking a US dollar based cash flow company, we took the government bonds issued by the US, government. Now let's assume we are valuing a Venezuelan based company having its cash flows in Venezuelan dollars. Now, will you take the Venezuelan government bond rate as risk-free rate? Absolutely not. As we all know, Venezuela is suffering from huge monetary and financial pressures. The currency is suffering hyperinflation. So the third most important thing is that not all governments are risk-free. That means that if the government issued a bond, it doesn't necessarily convert into a risk-free rate.